Welcome back to The Explainer. Today, we're unpacking an incredibly fascinating quarter in the healthcare sector. We're doing a complete deep dive into Privia Health's massive Q1 2026 earnings report. If you've been watching the massive transition from traditional fee-for-service healthcare over to value-based care, well, Privia is a company that absolutely demands your attention right now. They're scaling this physician enablement platform that is fundamentally changing how medical groups operate and really how care is delivered altogether. So we're going to look strictly at the numbers, the operations, and the strategy, straight from their earnings call and press release to see exactly what's fueling this momentum.
Okay, let's dive into this. Here's our roadmap for today. Number 1, the Q1 earnings beat. 2, driving the growth engine. 3, decoding value-based care. 4, Privia's AI tech strategy. And finally, number 5, looking ahead to their 2026 guidance. Don't worry, we're going to demystify all the complex operational metrics right after we look at their financial wins.
All right, Section 1, the Q1 earnings beat. Let's analyze this massive Q1 financial surprise and see exactly why investors should be paying close attention. Just look at the sheer magnitude of expectation versus reality here. Wall Street analysts had penciled in an earnings per share consensus of just 8 cents. But Privia, they delivered 19 cents. I mean, that is a massive 11-cent beat. It's a loud and clear signal that their business model isn't just growing, it's highly efficient at translating that top-line growth directly to the bottom line. And it really wasn't just earnings. Privia posted top-line revenue of $603.85 million for the first quarter. That easily cleared the consensus expectation, representing a massive 25.8% year-over-year jump. During the earnings call, CEO Parth Malhotra actually credited this to outstanding operational execution and the sheer strength of their diversified business model. It's really proving to be resilient no matter what the market or the regulatory environment throws at them. And this right here brilliantly illustrates why that revenue growth is so exciting. Adjusted EBITDA, which, is a key measure of operating profitability, surged 36.3% year over year to hit $36.7 million. This profitability expansion is the ultimate proof that Privia's operating leverage is working beautifully. Simply put, when your EBITDA grows faster than your revenue, it means you're scaling efficiently. Your fixed costs are being spread over a much larger revenue base, dropping way more profit right to the bottom line. Moving on to Section 2. Driving the growth engine. Let's look at the actual operational metrics behind this financial boom. This brings us to a really foundational metric for them: implemented providers. Privia ended the quarter with 5,535 providers, which is up 13.6% from a year ago. Now, what you really should take away from this is that provider retention is incredibly high. In fact, management noted that in their mature markets, 50 to 70% of new provider referrals come from existing Privia doctors. Think about that. The doctors themselves are quite literally the best salespeople. This growth in providers is the primary catalyst driving their massive $914.8 million in practice collections for the quarter. But of course, it's not just about adding doctors, right? It's about the patients those doctors actually serve under specific contracts. Value-based attributed lives absolutely exploded by 26.5% year over year, growing from 1.27 million all the way to 1.6 million. And this was driven heavily by a staggering 62% jump in CMS Medicare programs and a 36% increase in Medicaid. So they are successfully capturing a massive share of government-sponsored healthcare populations. Section 3. Decoding value-based care. Let's take a second to bust some of this healthcare industry jargon so we really understand their model. First up, we have attributed lives. These are patients assigned to Privia for value-based contracts. So the crucial point here is that these lives form the absolute core foundation of their recurring revenue. The patient still has choices, obviously, but Privia is ultimately responsible for managing their care and outcomes. The more lives they manage, well, the larger their base for shared savings. Next is capitation. So instead of the traditional fee-for-service treadmill where you pay for every little thing, this fixed per-member per-month payment completely flips the script. It actually rewards Privia for keeping patients healthy and keeping overall costs low. If they deliver great care efficiently, they get to keep the margin. Finally, care margin. This is a proprietary Privia metric representing gross profit from care delivery after direct clinical expenses are paid out. Management intensely tracks their adjusted EBITDA as a percentage of this care margin. And get this, in Q1, this metric expanded by 290 basis points to hit 28.5%. It's really the purest sign of their operating leverage, showing that as the business scales up, the platform costs to support that care are growing much, much slower than the profits generated from it. All right, Section 4. Privia's AI tech strategy. This is their secret weapon for future margin expansion. To actually drive this margin, Privia just bought on a brand new chief technology officer, Konda, who previously worked at Optum Insights, to aggressively deploy artificial intelligence across the board. And they've broken this down into three very distinct, tangible buckets. 1, enterprise and corporate functions, 2, care operations, and 3, care delivery at the clinical level. Let's see what that actually looks like in practice, because AI in healthcare can sound a bit abstract.
So, Privia is currently deploying Google Gemini and Snowflake's Cortex AI for their corporate needs. For patient operations, they're leaning heavily into agentic AI for automated outreach and self-service scheduling. And on the physician side, they're implementing autonomous coding, referral management, and advanced clinical decision support. The CEO explicitly stated that the ultimate goal of these specific AI investments is to push their margins to the high end of their 30 to 35% target over the next 5 years, and to do it without adding significant headcount costs. That is a real game changer.
Section 5. Looking ahead to their 2026 guidance. Let's talk about what's next for the balance sheet and potential M&A.
They've honestly set an incredibly strong baseline for the rest of the year. Privia maintained their massive 2026 revenue guidance of $2.4 to $2.5 billion. And because of the strong Q1, they actually raised their year-end guidance for attributed lives to up to 1.625 million. Furthermore, their recent acquisition of the Evolent ACO assets is completely ahead of schedule regarding both the team and the tech integration. But most importantly, and this is huge, they are operating with a pristine, debt-free balance sheet, holding $419.5 million in cash. That allows for aggressive organic and inorganic growth.
So, how does this actually translate to cash? Well, CFO David Mountcastle noted, this guide implies adjusted EBITDA growth of approximately 20% at the $150 million midpoint. And we expect 80% of full-year EBITDA to convert to free cash flow as we become a full cash taxpayer. That massive free cash flow conversion gives Privia an incredible amount of dry powder to deploy. They can acquire new practices and expand into entirely new states without needing to take on a single dime of debt. Which leaves us with a pretty compelling thought to wrap up on. We are seeing intense pressure on traditional hospital systems and those old fee-for-service models right now. Meanwhile, Privia is sitting on hundreds of millions in cash, they have zero debt, their AI integrations are actively scaling their margins, and their physician retention is sky high. So, with this flawless foundation, how much of the independent medical landscape will Privia consolidate next? It is a fascinating question, and one we will for sure be watching closely as the year unfolds. Thank you so much for joining me for this explainer, and keep learning.